an asset-light proxy to the defense theme, infra theme, cement theme, logistics theme. 10% of the company is owned by FIIs.
Right.
FIIs like companies where there's a kind of global essence to it, where the scale up can be very fast.
Welcome to the stock specific series. Today we will be discussing Ramco Systems, and we have Nitya Shah here to take us deep into the stock.
Right, great Raghav. Definitely this is interesting to start this series where I think it's a lot better when we discuss on a video basis. I think it's easier even for our subscriber community to understand better.
Right.
To understand why we bought this stock.
Right.
Right.
So let's get started. Tell us first, briefly about the company. What is Ramco Systems?
Yeah. So Ramco Systems, it's a software as a service provider. So they do various kind of interesting software product companies. So don't confuse this with IT services such as Infosys, Wipro, TCS. Those are different, and this is more of a product company.
Okay.
So they do very specialized kind of work. They make ERPs. If you've heard of ERPs, enterprise resource planning, they are used for optimizing workflows and operations at various factories, and it's used across multiple industries. You can make ERPs for specific industries.
Okay.
And they also make softwares for payroll and HR work, as well as for logistics.
Okay.
So it's largely a IT SaaS company.
Okay. So we'll get into the products a little bit later. First, tell us that how did you come across this company?
Right. So I've been aware of the Ramco group since quite a while. Their parentage is from the Ramco Cements group.
Okay.
So that's an age-old group, and initially Ramco Systems, they used to prepare the ERP for Ramco Cements plant.
Okay.
So that was the origination of the company. The IPO happened, I think, even pre-2000. So it's been in the market since a while. The product is well known. How I started paying more attention towards it was a business line article by their, that time the CEO was Mr. Sundar Subramaniam. He was ex-Infosys, I think highly experienced executive from Infosys. He was brought into the company to clean up the operations. So he had, I think this was somewhere around August 2024, where there was an article in the business line where he was talking about the entire restructuring and turnaround of Ramco Systems.
Okay.
So I read that article, and that's when I decided to relook at it, because even I personally had a negative perception about the company. And then once I read the article, I was like, now it seems like various catalysts are coming in. Maybe it takes time to turn around, but at least the steps mentioned in the entire interview or the article seemed very logical. That it seemed like a textbook restructuring play, and I was like, it's fitting in my framework that everyone's ignoring it, bad perception, highest pessimism. This is the kind of company we need to try to delve deeper into. Right. So that's how I came across the stock. It was a business line article.
Right.
So that's why just reading articles, you never know what connects where and how far it can take you in the stock picking journey.
So let's dig deeper into the product segments. I suppose there are 3 segments of this. So if you can elaborate on that.
So I think the key product which has really taken off for them recently would be the Ramco Pace, which comes under the payroll segment.
Okay.
So they launched this in FY25 itself. So it's not long since this product has been launched. And earlier, I'll tell you what the issue was in this product. They used to bill you upfront and take a large amount of money from you, and it used to take quite a while to execute the overall contract, right? So they around, I think, 55 to 60% of Ramco's revenue is recurring SaaS revenue, which gives you better predictability. So they changed the model of their earlier payroll system, where now they are able to access multiple geographies, multiple taxation systems, and show you in one currency. So it becomes like a one-stop shop solution for various MNCs. So say multinational corporations have multiple tax regimes going on. If they just want for a particular subsidiary of theirs that what's the taxation scenario happening here. So Ramco is now started going into the AI part of this. So you can just straight up ask the chatbot that tell me the tax expense for this subsidiary. Ramco's bot will come and give you the answer to your query.
It's like a Gen AI thing.
Yes, it's a Gen AI thing which they've recently come up with. So this helped solve a lot of the legacy issues, where payroll would be a little bit difficult to integrate. It used to take 2-3 quarters just to integrate the employees into the payroll system.
But I think they might face some competition from these big giants like Workday or Oracle.
Right. So see, what happens here is there's very few companies, I would say, who are able to capture, say at least 100 geographies and 100 currencies and have that all in one software.
Okay.
So I think it gives a lot of convenience. So your Workday and Oracle, like that Oracle software, what you're mentioning, that is slightly different. So that's more for the human resource function. This is more for the payroll function. So they work hand in hand. So it will not directly compete with Oracle. They'll complement the Oracle service.
Okay.
So say Oracle is doing all the employee attendance and all those kind of things are recorded in Oracle. Whatever it is to do with the payroll part of it, that Ramco will assist with.
Okay.
So the Ramco is able to communicate with the Oracle software.
Understood. So they have turned competition into collaboration.
Yes, exactly. That's a very good way to put it.
Yeah.
I would say they instead of trying to go heads on with giants like Oracle, they're actually working with them. And I think I also read, I think this was around 2 years back, where they tied up with the big four firm Deloitte to also start providing products on their behalf. So that was another tie-up that they had.
So now what about the MRO segment? Can you first explain what is this segment?
Yeah. So as you know, globally aviation as a sector is picking up quite a bit, and aircrafts require a lot of MRO, which is maintenance, repair and overhauling.
Okay.
Right. So now Ramco, basically it gives you an ideation of so earlier it used to be more towards the predictive, towards the preventive side of things. Like it used to tell you that where can some problem in any part of the engine or entire aircraft.
Like a calendar scheduling.
Yeah, it'll kind of give you like a calendar scheduling that this is coming up for maintenance. Now from preventive it's moved to predictive.
Okay.
So it's giving you predictive analytics on each component. So now I'll just give you an example. Say a helicopter has the wings, right?
Yeah.
Which is hinged to a bolt.
Yeah.
So it'll tell you exactly which component, when does it need to be replaced, what kind of wear and tear is going on. So it gives you an overall dashboard of the maintenance and repair that is upcoming. So it helps a lot of companies to prepare for this, and I think globally very few players are in the MRO SaaS space.
Yeah.
So I feel that this will be an indirect beneficiary to a lot of industries in an asset light model.
Yeah.
So here, as you know, it's a SaaS company. Operating leverage wise, it can scale up very fast.
Right.
That you're technically playing the infra theme through cement ERPs or various manufacturing ERPs.
Right.
Here MRO, you're playing the aviation theme through a software play again.
Right.
Logistics also you're playing through their software service again. So I feel you're getting to cater to a lot of types of businesses through a SaaS company, which is what really got my interest into it.
Right.
So this is another segment of theirs, MRO. And third is they also make software for logistics.
Okay.
So I think recently they even announced, I saw on their LinkedIn page, they had announced a tie-up with DHL. So that's also a pretty big deal for them. So even their recent new CEO, Mr. Abhinav Raja, he has a background of making a logistics tech startup. I think it was called Link, if I'm not mistaken, and that got sold to Swiggy. So he has some ethos and pedigree already in this space.
Right.
And he's recently joined and is helping Ramco transform towards the next leg of growth.
So like you mentioned that it was kind of a turnaround story. So can you tell us what went wrong initially in this company, and then how is it a turnaround now?
Yeah, that's a very valid question. So I'll tell you what exactly happened earlier. As I mentioned, initially it was for the Ramco Group cement plant itself, right? It initially started as that.
Yeah.
Back then, imagine the foresight was so good, they were trying to compete with the SAPs of that time in 1998, I'm saying.
Yeah.
Right? I wasn't even born that time. So they've been innovating since. So, the product's been in the entire spectrum since a long time. And back then, they were making it for cement plants, then they started more and more applications. So now I even mentioned earlier that for the payroll segment also they were taking large upfront fees.
Right.
So whenever there would not be any big orders coming in, you would see very I would say lumpiness in the revenue. That जब order आता है तभी ज़्यादा revenue दिखेगा in one quarter. Otherwise it was coming slight of lumpy kind of nature in the business. And then later they started moving more towards a SaaS model. So where they went wrong is they used to give you the entire service. So product wise there wasn't any major issue, or I would actually say they were doing a good job. The financial discipline was not there. I would say that's where it went wrong, that they would continue giving the service, not cut you off from the license.
Okay.
Right, like say you're not paying me for the service I'm providing, but I'm still continuing to give you the license. So your receivables are just ballooning up.
Okay.
So
and then that went on for a while?
Yeah, that did go on for quite a few years. Then later on they turned it around, again the same problem came up. Okay. So there was quite a big perception issue with the market also, right? That why is it taking so much time for Ramco to scale up? It's got a good product and everything, but repeatedly financial mismanagement was the reason they were not able to scale up very fast.
So the cash flow from operations were not.
Yeah, because your receivables are ballooning up,
Yeah.
automatically that ends up becoming a problem, right? So operationally, that's where they were lacking, and I feel that is what has got fixed now.
Okay, and how are they fixing it? Like, what is the pivot point?
Yeah, so earlier what would happen is every time there was any kind of shortfall, the promoter or parentage of Ramco Group, they would infuse capital into the company to keep the operations running.
Right.
So you will see on the EBITDA basis also, they used to be on a negative kind of operating profit margin. So that meant that the company was definitely in distress. So for years together, a lot of potential, everyone got tired of the stock, that it's just simply not moving. How do we think about this, what will happen going forward? So the key turning point was when Sundarji came in and cleaned up the entire company. He wrote off a lot of receivables. It was a textbook restructuring.
Okay.
So internal restructuring means just fixing the kind of work that's currently going on in the company. So he started cutting off all the licenses wherever receivables were due. Their headcount used to be around, I think, 1800 to 1900 people. These are approximate figures. I might thoda upar niche ho sakta hai, but just to give you an idea, that got all whatever redundancies in the workforce were there, those got cut down to around 1500.
And what year was this?
This was all in the last 1 to 2 years.
Okay.
I would say, and I still feel there's quite a lot of restructuring left. That it's, but I feel that as a stock picker, I do want to enter when the restructuring is done.
Yeah.
We need to capture the delta throughout.
Yeah, enjoy the journey.
Exactly, enjoy the journey. So each quarter I'm tracking what's going on, how the cash profits improving each quarter. That's what's critical towards the entire thesis.
Right.
So these were the 2 points. Firstly, that he stopped, providing service to whoever was not paying. Then they suddenly started paying. He repriced a lot of their contracts. So he felt that the contracts were not, the right value. He should have, got more value out of it. So he repriced a lot of contracts. Various contracts they had stopped taking, which were, causing a negative impact on the P&L. So maybe you might see that the order book has not grown much. It's maybe due to the fact that they are being more selective in what kind of orders to take. Rather take more high margin orders than just balloon the order book with, orders that can cause some kind of drag on the P&L.
Right.
So they fixed all these internal problems. Even they had so many subsidiaries abroad. So since it's a global business, they had subsidiaries which they slowly started shutting down. I think most recent was in Germany and Qatar. They closed down the subsidiaries. So they're just rationalizing and optimizing all the operations globally. So I feel that is something that's definitely, it's like a proper textbook kind of restructuring.
So about all this restructuring that you told me, what about the numbers in the balance sheet and P&L? Are they also appearing in that?
So see, usually the first thing that we look at in a restructuring is that how much debt is there on the books.
Yeah.
There's no debt in this company. So that was a green flag number 1 for us, that we don't have to worry about a pathetic balance sheet. The receivables was the main problem that had to be fixed, right? And that they managed to fix.
Right.
So that was extremely important as a part of the business. So on PAT basis, what I'll explain is that you'll see that due to various tax issues, they have some MAT credit issue in their taxation. That also has led to an inflated tax rate. So on the PAT level, due to even their intellectual property being amortized, you'll see that their amortization is almost equal to their operating profit.
Oh.
So it's a very high level of depreciation. So you should logically add back the depreciation to the PAT to get the actual sense of the profitability of the business.
Got it.
Right. So each quarter since the last 3 quarters, you will see a good improvement. One is also due to reversal of provision of debtors, and second is since most of their business comes from outside India. I think around 75 to 80% is outside India. You get a forex gain over there, considering that the rupee is weakening against the dollar. You're seeing even forex gains happening. So I think steady state they would be at a 16 to 18% EBITDA range, which I feel, as you know, software companies, once they hit that operating leverage inflection point, this can easily move towards a 21, 22, 23% EBITDA margin company also, like various other SaaS companies.
Because the marginal cost of acquiring a new customer for them is like almost next to zero.
Yeah, so maybe it takes a while for customers to get onboarded, but the point is the customer won't leave easily. The retention is very high. There's a lot of stickiness because see, once you've integrated a SAP or any kind of ERP, it's a very hectic process to again retrain your staff and get the entire ecosystem adjusting to the product once again. So due to that reason, like these were all green flags for me, right? The main problem what I had to mainly look at is will the product work or not. And luckily the product Ramco Pace was getting good traction.
So that's on the numbers part of it. Apart from that, like what is the perception of this company on social media like Glassdoor or LinkedIn?
So now I think in the last few months I've seen them get so active on LinkedIn. So all the companies which I've invested in or I'm tracking, I always follow their social media pages to just see what kind of communication is there from their team. And almost every single day I've seen some kind of post or some kind of deal win of Pace come online on the LinkedIn platform. And even their employee reviews on Glassdoor are also quite strong. I think they have a 4 out of 5 rating, which is healthy.
Yeah.
So looking at all these metrics, I was quite happy with the way they are even interacting with social media. So I saw that recently they won a deal with Hitachi Energy. They won a deal with DHL. So every day I'm seeing some kind of new wins coming in. So I'm quite confident on the revenue part of it. They have an unexecuted order book also of I think around close to 150 million and their quarterly order intakes are around 11 million. So I hope this moves towards a 25 to 30 million dollar kind of inflow range. That's when we'll see some fast growth come in. So I think that now they've cleaned up the operations, they'll be able to pitch for more growth much easier. Like once your operations are fixed, profits start coming in, you can chase new business and try to acquire new customers because now you're ready to cater.
Right.
So I feel that's why now they are ready to scale up the entire business.
So initially, like you said, we cannot compare it directly with these tech companies like Infosys or TCS. So how do you value such a company?
Right. So see, in a restructuring phase, it's always tricky to value, right? Because your numbers are all over the place. So your DCF goes out of the box because you're in a negative ROCE, negative PAT, negative EBITDA. So on what basis will you value it? So we have to try to value it on future profitability.
Okay.
Now say if currently the EBITDA margin, if you adjust for the forex gains and reversal of provision, say they are at an 18% kind of rate. So you try to annualize their latest operating profit. So say you get 1 year of profit and then you put in some, it's like a back of the envelope calculation. Say 2 years down the line, what kind of revenue and EBITDA will they be at? And if you look at most other product companies in India, so very rarely I have found a listed SaaS play in a non-banking software kind of segment, right? Like say you look at an Intellect Design Arena, they are mainly catering to the financial space, right? The software licenses are more for the financial space. So these kind of companies all trade at a minimum of 4 to 5 times EV sales on an average. And this, my initial entry at Ramco was at 2.5 times because their operations on a PAT level were in quite a total financial mess, as I would put it. So, and that has started getting cleaned up. So on a forward basis, you can just do a back of the envelope calculation. Say if they do around 800 crores of revenue or say they do 1,000 crores of revenue, can they get a 4x or 5x multiple on that? Eventually, once the operations are fixed and everything is on a steady state basis, like any normal product company.
Right.
So I would value it on that basis, that on EV sales, I felt that I was getting it at a discount to all other product companies in India. You can, it's not a like to like comparison, but just to give you an idea, like you compare it to an Intellect Design or an Oracle financial software or even a RateGain, they all trade at minimum 4 times EV sales. So if you just give that bare minimum benchmark once the operations are fixed, so maybe someday, you never know, this could trade at a 4,000 crore kind of market cap once everything scales up. So that was my thinking behind it, that I was getting it at a 1,500 crore market cap. So I was just trying to analyze where could I possibly go wrong.
So since you are riding this whole turnaround story, there must be quite a few risks in this company or the business operation. So can you elaborate on that?
Yeah, so I would say that firstly it's a global company, right, that they are catering to various kind of different economies. So forex risk will always be a problem. From track record, they've made mistakes in the past when it comes to financial mismanagement. So debtors is something I'll be looking at very carefully, which would impact the P&L directly, right? So if they if there's a big spike in their provision for debtors, again I would be very watchful of that. And if their product becomes obsolete, say if a lot of competition, God willing it doesn't come, but say if a lot of competition comes in this space, they stop winning orders, growth would be a third indicator that I would look at carefully. But otherwise I feel that SaaS companies, they are automatically de-risked from a lot of things, because your OPEX is your CAPEX, because you're basically investing in R&D and your human capital and your engineering team and so on and so forth. So it's an employee heavy organization. So in that way I don't see any major risks there.
Okay, so what kind of allocation have you given to this company?
So this is the largest allocation in our value by opportunity small case. So the reason I'll tell you is why. That firstly, this product that they make has a global feel. It can be easily scaled up globally without much additional cost, right? Because it's a software license by the end of it. So that's definitely one important part. 10% of the company is owned by FIIs. Right. FIIs like companies where there's a kind of global essence to it, where the scale up can be very fast. So that definitely met the criteria for me. Another thing which I look at is succession risk. So here most of the team has been with them since a long time. Most of the staff is quite well versed with the entire company, so I didn't see any major succession issues over here. They can always get a person to take over as CEO in the future in case God forbid anything happens. So succession wise, I didn't see any major key man risk in this space. Then third would be that you're getting a proxy, an asset light proxy to the defense theme, infra theme, cement theme, logistics theme. So you're getting
all in one company.
It's an all-in-one company with very fast scale up.
Yeah.
You're getting even a delta of the restructuring phase.
Right.
That's something else which I was looking at carefully. Margin scale up is possible. Top line growth can come in, more orders can come in. Basically all the negative parts of the business have now kind of slowly started to go away from the company.
Right.
So this was a very big reason, and plus currently they are not impacted by tariffs also. The tariff issue doesn't affect software companies.
Right.
That was another reason why I increased the allocation. Even the forex part of it, the rupee weakening is helpful towards them, that they gain on the currency part of things also. Right. So these were the reasons why I gave it the highest allocation. And yeah, they also had a good financial profile. If they had a debt issue, it wouldn't be my highest allocation. So pretty cleaned up balance sheet was important for me to allocate heavily.
All right. So I think we have had a pretty good discussion on this stock. To sum it all up, can you tell us what are the key takeaways on our discussion?
So I would say that we should keep watching the execution. That's extremely essential towards this entire thesis that we have. And hopefully they ride the tailwind in the MRO space. Hopefully the payroll segment of PACE takes off, and then we, God willing, get a good chance to see a multi-fold return on this company in the next couple of years. That would be my aim. So we'll track execution every quarter and take it accordingly. I'm honestly quite excited about this company, and SaaS companies are usually my favorite kind of companies. They scale up really well. So definitely I'm personally quite excited and invested in this company. So also please do not take this as investment advice. I have a bias in this company. I'm personally invested. Please do your own due diligence before you take any kind of position in this company. This I'm purely sharing for an educative basis. I have no official advice to give, even though I'm SEBI registered. Please consult your own advisor. Thank you. Hi everyone, if you like this video, you can check out our website KamayaKya.com, where we provide 3 stock picks when you sign up, and you will also get an initiating coverage report of Ramco Systems for free. Stay tuned for more updates.